Crypto is being regulated and the government is going to take it all from you.
What?
Just kidding, but since crypto is still a new phenomenon, governments are scratching their heads to figure out what to do with this new financial concept. If you're an investor, you absolutely need to watch this video so you can be aware of the current laws and regulations regarding crypto and don't end up losing all your assets. So in today's video, we're going to talk about regulation. What does it mean and what's the point? And why should you care if crypto exchanges are regulated? We're going to deep dive into some of the problems that traditional finance has and how crypto solves those problems. We're also going to talk about, what is decentralized finance, the pros and cons of regulation, and what all this means to you as an investor. Real quick though, to keep getting juicy secrets about all things crypto, I invite you to subscribe and click the bell icon that shows up next to the subscribe button to enable notifications. What is the point of market regulation? As long as there's been an economy, there's been some sort of regulation. It was in the early 1600s that we first heard about market enforcements on a stock market by the Dutch Empire. Since then, market regulations have increased and become, quite complex. But what is the point of market regulation? According to Charles Goodhart, author of Financial Regulation, the three main reasons for market regulation are to protect the customer against monopolistic exploitation, to provide smaller retail, less informed clients with protection, and to ensure systemic stability. Now, you would think that these core principles would create a wonderful utopia of compliant individuals in business, no corruption, right? I hate to break it to you, but regulation doesn't always lead to better compliance. In fact, today, we still have corruption and poor risk management in the traditional finance world, despite all the endless documents of proper financial regulation. So could cryptocurrency be the answer to failed international systems of central banking? So with all the problems of traditional finance, even when highly regulated, what can be the grand solution? I present to you cryptocurrency. That is decentralized finance. In theory, crypto fixes a lot of things. It fixes inflation, corruption, incompetence, theft. It fixes inefficiencies, speed, privacy, intermediaries, energy, and trust. For example, the blockchain is immutable. Consensus algorithms such as proof of work and proof of stake solve the problem of corruption in that it is impossible to manipulate blockchain records. Decentralization promises to be the new world order. Crypto is part of a potential grand solution to the financial world known as decentralized finance, or DeFi. So to simplify it briefly, DeFi is alternative peer-to-peer financial services that are based on blockchain technology. So we've already seen that one of the features of DeFi is that of immutability. Here are some other pros of DeFi. DeFi is permissionless. That means it reduces the need to depend on middlemen or other big banks. DeFi offers transparency. It has a transparent ledger where all activity can be seen, verified, and audited on the blockchain. It has lending and borrowing applications. Smart contract integration allows for faster transaction speeds and ensures safeguards and allows for higher accessibility to borrow and lend money. What about savings apps? Yield farming allows users to move their idle crypto assets to protocols with lending pools to earn interest on their crypto with better returns than in traditional savings accounts. Tokenization. Issuing of crypto tokens on the blockchain helps achieve different functionalities. Examples include utility tokens, real estate, or security tokens. Because DeFi is a very novel concept and technology, there are some complications with it currently. Some of those complications include scalability. Transactions on DeFi can take long periods of time and can be highly expensive during times of congestion. DeFi could accommodate thousands of transactions. There's also uncertainty. So in DeFi, you can have the automatic inheritance of instability from the host blockchain. What about concerns of liquidity? Total value locked is roughly $83 billion during the making of this video. This is not as big of a market as in traditional finance, therefore it can be difficult to trust for some people. And then there's shared responsibility. Since there are no intermediaries, users take full responsibility for their mistakes. Problems of criminality. Although no financial protocol is immune to this, some see this as a drawback to using crypto in general, especially DeFi protocols such as Monero. international, national, state, and local regulation. In 2020 to 2021, crypto began to go mainstream, which promoted the widespread adoption of institutional and retail investors alike. Governments began to scratch their heads and thought, what is this? Unregulated currency? We need to do something about this. Let's tax it. And so setting the stage for the building a framework to govern this massive new market began. However, regulatory frameworks are still novel and are going to need a lot more time to develop, as with any new things in the world. Crypto assets, cryptocurrencies, central bank, digital currencies, and NFTs make the new crypto universe. Now, most of the countries that contribute most to the global economy have legalized the use of crypto. However, China, Colombia, Bolivia, Bangladesh, Iran, Turkey, Egypt, Algeria, Morocco, they've all banned crypto. Internationally, the Basel Committee on Banking Supervision and the International Organization of Securities Commissions are concerned about crypto posing a threat to financial stability and seriously want to regulate crypto. The USA's crypto regulatory agencies include the Securities and Exchange Commission, the SEC, Treasury's FinCEN, the Federal Reserve Board, and the Commodity Futures Trading Commission, or the CFTC. The SEC sees crypto as securities, the CFTC sees it as a commodity, and the Treasury sees it as a currency. It's a hot mess, guys. Oh, and the IRS has issued tax guidance as well, so beware of that. John Wu, the president of Ava Labs, has noted the need for proper crypto regulation. He said, quote, "It has become abundantly clear in the past year that in order for blockchain to succeed, there will need to be some degree of assimilation with the traditional way of doing things." He also noted the top concerns from governments. There's a concern about, quote, cryptocurrency being used as the primary exchange of value for illicit activities, and people taking advantage of the uneducated investor through scam ICOs. KYC and AML involve collecting basic personal information such as names, addresses, social security numbers, and all this is to check for criminal activity and to monitor users' transactional behavior to prevent laundering behaviors. Wu gives the pros and cons of regulating crypto. He lists some pros that include investor protection. Investors can be protected from scams and invest with confidence. Industry-wide legitimacy. If more institutional investors join in, demand will skyrocket and prices will increase. Higher quality issuances. Requiring users to adhere to securities laws raises the barrier to entry in the token fundraising market and places token issuances under a higher level of scrutiny. Some of the cons include exclusion of valuable projects. A high barrier to entry also increases the quality of projects, but at the same time, it screens out high potential projects due to the financial and regulatory strain. Investor exclusivity. Classification as private securities pursuing Reg D or Reg S exemptions greatly reduces the potential investor pool by restricting those who are to invest based on the accreditation standard. Also, poor user experience. KYC and AML is extra paperwork for users, which begins to go against the principle of true decentralization. Okay, so what's the case for centralized crypto exchanges and regulation? Well, in the US, cryptocurrency exchanges are legal and regulations vary state by state. The FinCEN does not consider crypto as legal tender, but considers exchanges to be money transmitters since tokens can be a substitute for currency. The IRS also does not consider crypto as legal tender, but as a digital representation of value that functions as a medium of exchange, a unit of account, and/or a store of value. It has tax guidance for exchanges. Exchanges fall under the regulatory scope of the Bank Secrecy Act, meaning they must register with FinCEN, implement an anti-money laundering, combating the financing of terrorism program, maintain records, and submit reports to authorities. In the June 2019 Financial Action Task Force guidelines, FinCEN clarified that exchanges are to comply with the travel rule to gather and share info about the originators and beneficiaries of crypto transactions. In October 2020, FinCEN released a notice of proposed rulemaking on adjustments to the travel rule, signaling the introduction of new compliance responsibilities for cryptocurrency exchanges. These centralized exchanges include some you've probably heard of: FTX, Gemini, Coinbase, Kraken, KuCoin. How about decentralized exchanges like Uniswap? Are they regulated too? Well, it's complicated. According to the SEC Commissioner Caroline Crenshaw, quote, "In the United States, multiple federal authorities likely have jurisdiction over aspects of DeFi, including the Department of Justice, the Financial Criminal Enforcement Network, and Internal Revenue Service, the Commodity Futures Trading Commission, and the SEC. State authorities likely have jurisdiction over aspects as well." However, she does go on to say that many DEXs don't register with the government. She goes on to say, "That being said, for non-compliant projects within our jurisdiction, we do have an effective enforcement mechanism. For example, the SEC recently settled an enforcement action with a purported DeFi platform and its individual promoters. See the case against DeFi Money Market. I'll leave a link in the description." The US agencies will continue to bring enforcement actions, but their preferred path, they say, quote, "is not through enforcement and do not consider enforcement inevitable." Many organizations have been trying to come up with regulation solutions that will please both the investors and the governments alike. According to Sheila Warren and Sumita Deshmukh, Chief Executive Officer and Policy Advisor of Crypto Council for Innovation, DeFi is similar to traditional finance in some ways, but it's vastly different as well. They represent various parts of the technical stack, varying objectives and services, and have different interactions with other services within the space. You simply can't regulate DeFi the same way as traditional finance. Policymakers are going to have to keep in mind to not rush regulation, collaborate between public and private sectors, and that tech neutrality is essential. What is the future of crypto regulation? Well, crypto exchanges are regulated by governments. However, there is so much more that needs to be worked on before anything is perfect. In January 2022, US agencies engaged in a, quote, "crypto sprint" with blockchain and crypto experts. It was quite the hearing, you should really check it out. And after it was all over, they released a roadmap that detailed how crypto will be regulated in the future. Here's a list of topics they discussed. They talked about bank custody of crypto assets, sales of crypto assets by banks, stablecoin issuance, crypto as collateral for bank loans, rules for holding crypto on a balance sheet. So it seems that they want to impose banking regulations on crypto exchanges. What do you think will be the future of crypto? Traditional finance pretty much failed to meet its own standards. Will crypto follow the path of failure? Or will it learn from the mistakes of a messy financial history? So if you enjoy this video, please make sure you hit the like button. If you haven't already, make sure that you hit the subscribe button too and turn on bell notifications. Because my channel is brand new and there's no way you'll know about new videos that I release unless you use the notification bell. All right, thanks so much for your support and I'll see you in the next video.